Hello, everyone. Welcome to our Spotlight On series, which is designed to showcase some of Innovate Finance's most exciting early stage fintech members, highlighting some of the trends and innovation that is seeing across the fintech ecosystem. Today, we're joined by Linda Du, co-founder and CEO of Moola Money, and Stacey Boddy, co-founder and CEO of Aventur. Today, we're going to be discussing on the topic from paycheck to wealth, tools empowering personal finance. Thank you both for joining me today. Do you want to quickly introduce yourselves?
Stacey Body, as you say, CEO, co-founder of Aventur. My background is 25 years regulated within the retail wealth management space. I also did a stint within tech innovation consultancy, and then we started Aventur to deal with a lot of the problems within the wealth space about 4 years ago.
My name's Linda Du. I'm the co-founder and CEO of Moola Money. We're an AI-powered platform empowering the next generation to build wealth through financial planning, coaching, and execution. My background is in management consulting, so I was at McKinsey in the Middle East and Europe, advising retail banks on strategy and risk. And I also started an investment vehicle called Octa that does a alternative investment allocation.
Thank you both for joining us today. Now that we've done a little bit about yourselves and your background, I think it'll be useful for us to also know more about your company. So, Linda, can I start with you? Can you briefly tell us about your journey and how Mola Money helps users manage their overall sort of financial future?
Sure. So the idea for Moola really came from my friends. And so the background is that I had done really well in retail investing, and my friends kind of knew this. So when I started my investment company, I had a bit more free time. And what I found was that people were starting to come to me for financial guidance, coaching. And while I didn't have a, FCA advisory background, I found that the toolkit that I'd learned at McKinsey, where I was doing financial modeling and supporting decision making, was very applicable to personal and household finances. I saw that there wasn't really a tool to support people end to end with that, transparency, giving people an overview of their accounts all in one place, showing people the trajectory of, okay, if they don't do anything and follow the same trajectory they're on now, where will they end up at retirement? And then also that decision making, so supporting people to see, okay, if they were to make certain key life decisions like paying for a wedding or buying a house or retiring early, what are the actual implications on of that on their trajectory in a really objective view? So I basically spent last summer manually modeling this for people in Excel sheets. And after a couple of times, you start to see that the logic that you use and the process that you use gets pretty samey. Learned a lot also about the customer journey, things that sound quite intuitive now, but took a couple of times to get right. So things like, organizing information in bite-sized pieces, starting with insights, not showing too much analysis because that tends to terrify people. And so after I did that a few times, I realized that we could really automate this by codifying the algorithm, the financial algorithm. So that's our core IP. And then I also found that I could basically automate it myself because agentic AI was really picking up and people were really trusting agentic AI. So a lot of people say that agents are more empathetic than humans. 80% of our customers say that they feel more comfortable speaking to an AI agent over a human about their finances because it's so personal and they feel less judged. So, yeah, we launched our MVP in March. We launched subscriptions a couple of weeks ago. We have over 1,000 users, and we're planning to launch open banking next month.
That is really interesting. You're a really nice friend, I must tell you, who's
Yeah.
others with financial decisions. So thank you. That's a very interesting journey. And Stacey, can I come to you now? So as a fintech focused on personal wealth management, what gap in the market are you solving that the traditional providers haven't already addressed?
Well, again, very, very similar to where Linda is. The number of people that are actually accessing advice or able to access advice has been decreasing. It's only going to continue to decrease. But also what you're seeing is the next generation of investors are less likely to want to be sitting in front of the traditional routes. Um, Obviously, the regulator is aware of this issue, which is where targeted support's come in. We've been sort of fundamental in designing targeted support over the past sort of 18 months through various groups. And it was that project that we put into the Supercharged Sandbox, where we developed a lot of the AI solutions with the FCA and NVIDIA to actually sort of create better outcomes for customers. Very similar. We are very much client-centric, helping people understand what their options are, what their goals are. Um, we obviously we're seeing AI models starting to move into this financial planning space, but we're very passionate about not being another what if machine. You need to be able to allow people to actually execute on their plans, which is where we're coming. And we are more of a B2B proposition. So actually, it's the banks and the large insurance companies and asset managers and pension providers who have millions of customers that they can't look after. And we're really that commercial operational sort of platform for them to better engage with the customers that they've got.
Thank you, Stacey. Really interesting again. So, to sort of look at the landscape that you're operating in this time, so quickly to the both of you, what are the top two trends in personal finance tools today that individuals really cannot afford to ignore?
Yeah, well, I would say the big one really is targeted support. Traditionally we had full fat advice, which had high fees and priced a lot of people out purely because it was based on assets under management. It's becoming less and less efficient to deal with clients, and we're seeing that the levels in which traditional advice can work with people is only increasing. The number varies depending on how efficient those firms are, but you're probably looking £250,000 plus. Otherwise, you can't be talking to an advisor, really. They can't afford to look after you. Or you just had guidance, and guidance is okay, but it's really just providing information. The bit in the middle, which is this targeted support area, where you can use data sets to support customers understand what options are and better lead them into those options. And then obviously towards the end of the year, you have the simplified advice journey where you can actually help them actually implement investments, etc. And that's exactly the space that we're in. It's the way in which we can actually support people to achieve their goals, but at a much lower cost than traditional advice, purely because now the data sets can be processed through AI systems.
For me, I would say reliability of data. And so a question that I get asked a lot is why don't people just do this in Claude or ChatGPT? And people do it in Claude and ChatGPT. And so I think large language models are great for a lot of things. A couple of things that they're less good at is providing consistent answers. So if you ask the same prompt twice, worded the same way, you might get a different answer. They're also less good at math. So very famously, if you asked ChatGPT how many R's there are in strawberry, it kind of freaks out and starts hallucinating. And so with something that's as sensitive as personal financial information, building that trust through data reliability is really critical to us. And that's why we skipped large language models in the course. So we did deterministic rules-based financial algorithms based on modeling and expertise. And so once you put the same set of numbers in, you always get the same set of numbers out based on the rules and assumptions that are used. And then the other thing is we've just built a data warehouse so that we can pull in macroeconomic indicators, things like inflation rates, product interest rates for a subset of different countries in the UK, US, and EU. And so what that enables us to do is to basically source all the data and say, okay, if we're saying that looking at a cash account and saying that this is under market value, we can actually pin that down to very reliable sources such as the ECB or the Bank of England.
Yeah, that's a really interesting perspective. I know that both of you touched a little on AI, and everybody's talking about it now. So here you go. The question is, are AI-driven budgeting and wealth planning tools really becoming mainstream? And how are your customers sort of seeing that span out as well?
Absolutely. Adoption of AI is, I think everybody's business within this space is now an AI business. The challenge comes to not being another what if machine. We all know how to be healthy. We go to the gym more and drink less and, getting people to do things is where that challenge comes. Obviously, I mentioned earlier, OpenAI is now moving into the financial planning space within the US. The challenge comes to actually how do you implementate that? Where do you custody? Where's the investment strategy? So adoption of these models is only going to increase, but quite rightly, as Linda says, it's making sure that the hallucinations aren't there and actually it's giving you consistent answers. For us, that's absolutely paramount. We cannot deploy our technology into tier one financial institutions unless we know ABC goes in and the answer is XYZ. We need that consistency. We need that auditability. It is more than possible to do it. It's not just training LLMs, exactly right. But yeah, I think there's lots more moving into this space, and the big players are moving into this space, but actually doing it in a way that is safe and secure, that is enterprise ready, is really the bit that we've cracked.
Thank you, Stacey. Yes, go on, Linda.
Oh, yeah. So, something that I am interested in on a personal level as well. So, I grew up reading a lot of science fiction and I'm really interested by this. It's almost like a semi-anthropomorphization of AI that people have. I read a lot and listen to podcasts about robot human relationships and AI companions. And the way that we see that in our product and in this AI supported or AI led financial guidance is quite interesting because, in some ways, I mentioned that some of our customers mentioned that AI is more empathetic than humans and that they feel that they can share more because there's less judgment. Someone actually said, I know that ChatGPT is not going to go home to its spouse and laugh at this 30-something-year-old that doesn't have its finances figured out. So it's in some way, it's like people are more trusting with their information with an AI and they know that they can't ask stupid questions or they can ask stupid questions and then they won't be judged for it. So it's like almost a semi treatment of AIs as humans, where in a lot of cases they're more trusting. But then we have also seen that there are certain situations in which people prefer to speak to a human about financial advice. And then the three that we've seen the most commonly are anything to do with the house, because that's usually the biggest financial decision that people make. Anything where someone's moved to a new country and just wants to get the lay of the land. And so, for example, if I might know what a Roth IRA is in the US, but then when I come to the UK, it's like, oh, actually, that's now called an ISA. That's like a simple example, but then salary sacrifices and all the tax benefits in the UK, it's much easier to get that lay of the land from a human who's very well versed in a certain jurisdiction and the tax benefits there are there. And then the third one is anything relational. So divorces I have seen are very expensive, but then on the positive side as well, things like negotiating a prenup, things that are rooted in emotions or relationships. It's always, most people prefer to speak to a human to get coaching about how to handle those situations. So, yeah, I think it's just in certain circumstances, one might work over the other, and it also depends on the consumer's individual preference.
Yeah, 100%. I think there are some sort of financial decisions where you prefer to speak to a human, so that makes sense, the ones that you highlighted. So now that we've touched a little bit on the challenges, but to look at the sort of the challenges and opportunities ahead, Linda, where do you most see users struggle when they're really trying to plan effectively for their financial goals, be it a house or be it their pensions, etc.?
I think there's always a feeling of FOMO. And actually, when we were building out our investment demo, so one of the things that we were doing was back testing and saying, okay, if you'd done this portfolio 5, 10, 20 years ago, here's how much you'd have today. And a lot of people actually, it's really powerful in the sense of like, jump on this soon before you let it escape you. And for some of our customers, that was kind of their go ahead to start investing. But for a lot of other people, people are like, oh, I've missed the boat already. And yeah, even though everyone kind of intuitively knows it's never too late to start investing, people often feel like, oh, they've missed the boat, so that there's less returns. And so there's a lot of inertia around getting started. Another one is trust. And so there's a lot that we can do in terms of, highlighting the value that people can get out of the product. But a lot of people just aren't comfortable putting their financial information on the internet. And for that, I think that's really tough to get around. Yeah, there's things that we can do like, word of mouth, referrals, etc. So that, okay, if the recommendation comes from someone they know, that's kind of the most effective. That's the most effective sign up mechanism. However, if someone's just intrinsically doesn't want their information on the internet, there's not much we can do about that.
Yeah, I think that makes a lot of sense. The trust factor is key when it comes to personal finance tools, especially. Stacey, can I also bring you in here? So, what common gaps are you seeing in financial planning with when you indulge your customers, and how do you think your tools help bridge them?
Exactly. I think most platforms that, we've seen this transition, democratization of finance, they all focused very much around the investment. We're very close to the guys at Nutmeg, and, they were brilliant in, making available investments through technology. The challenge that those guys had was when markets moved negatively, the clients weren't actually understanding what that investment was for. So we come at this very much as if we're regulated advice firm. So we've come across and really productized the advice process supported by AI, and we go about the process of onboarding clients through very much goal related. So it's very centric around what they want to achieve. The next thing you then talk about are sort of the products that will get there and maybe the tax wrappers that can get there. Obviously, we have the full suite available for them for that to work. And then we also run the model portfolios at the other end, which then are really the power that get them to that goal. And it's that process as if you were going through this with a financial advisor, but doing it with your own technology and supported. But then the beauty of the AI allows you to then put that into a full feedback loop. So clients are constantly being reassured that they're on track. What the FCA loved about what we built and the way we come about this is the fact that we score those goals. And when we deploy that into tier one institutions, they can clearly see the impact that they're having for clients. So it's the positive impact that moves a client from one position to another position and gives them complete clarity over everything that they've got, which is that's really where our USP comes in. The other thing, going back to that human in the loop, absolutely critical. When we test clients, 50% of clients wanted to ensure that there was a human available, a regulated individual that could be there to actually advise them on what to do rather than just give them the information. And yeah, that's exactly what we're able to do. But we come at this with technology first, but with humans sitting there behind to support it. But our humans know who that client is, what it is, what they want to achieve, who they want to achieve it for, the time horizons, the risk categories. But as a regulated platform, we can then also manage that money, manage those investments, and have everything in a single platform that then, again, feeds back to those clients. It means we can give that advice much more laser focused than traditional advice models that you generally go through a 3 or 4 hour long process and end up with a 50-page report and telling you how to put £20,000 into an ISA, which was acceptable behavior in the 90s, not necessarily these days.
Yeah. Yeah, agreed. No, that's very interesting to see that customers want humans in the loop, as you both touched on it.
Absolutely.
Yeah, so when it comes to sort of balancing out the guidance part that you both mentioned, what
Mm.
is the strategy that your platform really uses to help users improve their sort of financial well-being without overwhelming them? Because sometimes I do see that, especially for the Gen Z or the millennials, it gets a bit overwhelming when you see a lot of things with AI. It becomes easy for you to for you to panic and be like, oh my God, what am I going to do with my money? Or how am I going to save up? So how are you sort of tackling this with the customers?
Again, coming back to that simple goal-based scoring method, keeping it as simple as possible. I mean, as I say, been doing this a very long time. You understand how clients, and generally clients, go through phases in life. Um, and understanding where they are, what it is they want to achieve, keeping it as simple as possible, but also having the data available within a single platform that then can react accordingly, make those suggestions, use those targeted support journeys to suggest products and outcomes, so to eventually, through the simplified advice, to actually implement the investments, but always having that regulated person that is there and can actually give them the advice that they need when they need it, in the most efficient way possible, at the lowest cost possible. That is, for us, the only way in which these large financial institutions can actually tackle the millions of customers that they've got that they now just can't afford to serve.
Linda, can I also bring you in on that question?
Yeah, yeah. So for us, there's a couple of different things. So we have a three-stage journey. So we want to help customers get to insights quite quickly. So in the first onboarding questionnaire, we have a pretty high level ask of, okay, what's your income, roughly what are your total expenses? And then you can add more detail on a more granular basis. So then we do the breakdown into accounts. We're launching our open banking integration to actually kind of categorize the different spend categories. And then we would then show more and more detailed images on the dashboard. But even in that first pass, which takes about 5 minutes, we show some high level indicators of, okay, where do you sit? Can you expect to retire? How comfortable will that retirement be? So, yeah, so by phasing it out, and that's something that we picked up during the manual modeling stage, that helps the user to encourages them to go through the process and reduces the friction a bit. We also have this non-financial model about financial personality that people really like, which measures scores across 3 dimensions. So risk appetite, which most bank risk questionnaires will ask you about when you start investing. But we also ask about timeline to make decisions. So whether someone's impulsive or more long-term thinking, and current level of financial confidence and awareness. And then we give people scores across those categories, as well as show them an archetype. So these will be things like, oh, savvy strategist, cautious dreamer. So it is a bit of kind of like a BuzzFeed personality quiz, but that actually becomes quite important later because it informs the guidance that we're able to give, similarly to how risk profiles are currently being used by investment advisors to provide recommendations. And then another key part of our messaging, and this was quite interesting in our brand positioning. And so I guess this also aligns a bit with what Stacey was speaking about, but around life goals rather than around specific habits. And so something we've been very clear about from the start is we don't want to be a budgeting app. We're as millennials, so our co-founding team is all millennials. As millennials, we were the generation that was told that we can't afford to buy houses because we were buying too much avocado toast. And that's nonsense, right? So our positioning is we're not a budgeting app. Like compared to a lot of competitors, a lot of people focus on one phase of the journey, be it budgeting, investing, banking. And so we're a level above that where we don't really care how much money you're spending on Starbucks Frappuccinos because if you're getting your pension in place, if you're doing like an SIPP or like doing some kind of ISA, those Starbucks Frappuccinos are probably not going to make the difference. So we'll help you sort out those parts. So that you can go live the life that you want to. So it's kind of that aspirational messaging of let's just get this stuff sorted. We'll help you through the process so that you can go out and actually live your life and do the things that you want.
Yeah, I think that's definitely very reassuring. So yeah, that's very interesting. So I think when it comes to especially dealing in your space in the fintech industry, real-time insights and decision making is key. So Stacey, can I quickly ask you on how important is real-time financial insight for your sort of users when they're planning their wealth journey?
I'm going to be quite challenging here because I don't. It's not important at all.
Okay.
So, although we are a completely free to use mobile app that's on always in your pocket and they're supporting you continually through this, all of the testing we did, having real-time insights drove completely the wrong behaviors from customers. They were deeming this as a trading app, an eToro or Trading 212, where they were just trying to trade markets. Also, the way that our goals based system is set, having sort of daily real-time data. Also, they were trying to gamify the goal scoring, which was not behavior that we wanted to do. We wanted. So we purposely moved this to a monthly score update, which actually then encourages people to think about financial planning more as a long-term goals based. It actually took a lot of the tension away from people, and that's something that is really paramount for us. We're a B Corp. We're about empowering individuals, not causing them additional stress through throwing data at them all the time. So having a more relaxed monthly update, if there's significant changes that happens within the client's portfolios and financial setup, then obviously that score would be updated. But we purposely moved away from live data because, as I say, that drives completely the wrong behavior. Going back to where the situation with the trading apps were, if people are focused on their goals and what it is they want to achieve, we don't talk about products. We don't talk about mortgages or pensions or ISAs or SIPs and SASs and all the other bits. We talk about their goals and what it is they want to achieve, how they're best going to achieve it, and what it is they should be doing, guided through the technology to improve their score for next month. So it's very, very clear and it's very calculated. What that also does is moves people's mentality away from investment performance, because what we saw with our friends at a lot of the investment apps was in market downturns, people would get freaked out by market movements and would then invest at completely the wrong point, purely because they were not bought into what they were looking to achieve with that investment, and are they still on target for those investments, and is this market movement massively detrimental to where I want to achieve, Or is it just a market movement that is actually part of the journey that I'm on? So yeah, it was absolutely vital.
I think that's a really interesting point. It also weaves into the overwhelming bit that we discussed earlier, where users get overwhelmed when they're thrown real-time sort of insights. So I think that makes absolutely a lot of sense. Linda, also another interesting question for you is how do you think that Moola Money can provide sort of actionable insights or recommendations to help these users make financial decisions before committing to suboptimal choices that are more often there on the plate?
Yeah. So, as Stacey, as you were talking, I largely agree with this slight nuance because I think that real-time insights are important, but real-time actions are, yeah, as you mentioned, are not necessarily the best thing to do when you're planning for the long term. And so, what we do is we try and keep things as objective as possible and as visual as possible. And so, a lot of our customers, they have an Excel sheet. And they use that Excel sheet to kind of track things at a very baseline level. So they'll model things out, they'll model their assets and their debts. And so what we have found really helpful with these real-time insights is just enabling people to say, hey, if you've got a multi-currency account, actually, because one example is one currency might have weakened against the pound. And so maybe it actually does make more sense for you to convert that and to hold it in a high yield savings account in a different currency, for example, because we are seeing some, quarterly degradation of a currency. But what we do is we have a couple of different dashboards that encourage people to make different choices. But I think it's this interface of the AI agent and the dashboards that make the biggest difference. And so core to our planning model is this scenario planning. And so what you can do after you've set up your dashboard is you can basically start modeling different scenarios using the AI agent. And so those might be questions like, what if I maxed out my pension this year? Or what if I moved my cash that's sitting there into a high yield savings account? And what the AI agent then does, it actually orchestrates that. So it would ask you for additional information to be able to set up the scenario. And once it's got that information, the scenario pops up as a chip that you can toggle on and off. After you've configured it for the first time, you can edit scenarios directly. You can delete them to change some of those assumptions. You can also pull in some interest rates, etc., from the data warehouse that get updated to say, okay, like if I want to model higher inflation because inflation has risen, unfortunately, and this is what that looks like on my long-term profile. So yeah, so we basically show people the impact of their decisions immediately. We let them also ask educational questions within the AI agent to explain different things. And so, yeah, and we have actually seen, so the really nice thing is that because there was about a 6 to 9 month gap when we were building the product from when we did that manual testing with our alpha users last year, we approached them to be some of our early private beta customers at the start of this year. And what was really amazing was how much their financial situations had changed just from the fact of starting to look at this with us. And so in one case, and we'd basically pre-populated all their data into our platform from the data they'd given us last summer. But then they were saying, oh, well, I've actually got 6 times as much in my investment account now. I saw that the impact that this can make. So I added loads more. And then because markets happened to do really well at the end of last year, that's now ended up me having 6 times as much in my investment account. Another person actually left their job because in that initial round of modeling, we showed them, hey, well, if you wanted to leave your job and start your own company up, we that you could keep going at your current lifestyle and expense rate for 5 years. Or if you're willing to drop it by cutting out a couple of line items or reducing a couple of line items, you can keep going for 8 years. So that for us was really nice to see because we've always seen finance as a tool and not an end to itself. And so actually just seeing people make these really critical life decisions and achieve agency was really heartwarming for us.
Yeah, I think that's very exciting to hear that in terms of the goals that you're seeing and the impact that you're seeing Moola Money have as well on your users. Also touching on a little bit about your company and as you scale and grow, how do you ensure your tools remain effective, reliable, and adaptable to sort of the diverse user needs? As I imagined, you do have scaling plans in place. So how are you navigating through that? It's open to the both of you, so whoever wants to pitch in.
As I say, for us, it's about reaching the most people we can, and continually being relevant, continually testing with clients. At the moment we have, say, 3,000 clients where we manage the money for those clients. We want to continue to grow those funds under management for those clients. We'll be looking at doing those in more intuitive ways, shall we say, using low cost ways of which we can manage those money. But as I say, it's about helping those clients understand that journey. With us, although we have a D2C free to use app with all of the modeling technology with the advisors, our main model is to go in and support banks, large financial institutions. They are under increasing regulatory pressure for helping the clients, but unfortunately they're paralyzed because they just cannot afford to look after people in those traditional models. And that's where our technology is built modular enough to deploy and solve multiple problems across those industries. And as we're engaging with more and more financial institutions, the roadmap is getting longer and longer. But we've got to keep the main end user, the end client, because it is their financial journeys. And the only way in which we're going to help the majority of people is to give them the tools, and not put barriers in their way. Give them the free to use tools that allow them to move their journeys forward, but do that in a clear way. And we've got nice tools like voice to voice AI tools coming in that actually allow you to come in and engage with people. But again, it's just listening to customers, and yeah, forever expanding roadmaps.
Great, interesting. Linda, do you have anything to add?
Yeah, so it was really interesting for us because similar to Stacey, our product is very broad and so anyone could use it. So when we were defining our ideal customer profile, it was very psychographically based. So we define our ideal customer as a high potential wealth builder at a key inflection point. And so we were looking into MBA students are quite a good example because they don't have any income during the years of their study if they're doing a full-time program, but then they're likely going into careers where they have stable income, high earnings potential with high career growth. People also, who have just been promoted. We were looking up these people on LinkedIn and seeing, okay, how do we kind of best support them? But people have such different financial needs that I think by keeping very close to end customers, we are actually a direct to consumer product. So keeping very close to end customers, and actually just going in and at every stage of our building cycle, we've been building directly with our customers, sitting through interviews. Even at the start, the process was taking weeks because we were doing that Excel sheets, going back and forth with emails. But it was that Paul Graham thing of do things that don't scale because you learn so much about the customer through that. And then more recently, we're able to go through in 45-minute sessions and see how the customer responds to the product. We do a lot of synthetic data testing. We do a lot of, MCP, Playwright, automated testing. We actually have like 10 agents running on a GCP virtual machine, doing automated checks, both using real customer journeys, but also using their personas that we've created. but we still find that there's no replacement for watching a customer go through, seeing their pain points. And so, yeah, so we try and do that as much as possible. And also, there's a lot of really interesting things that come out in those testing sessions. And so, some of them are things like I remember I was once speaking to a single mother who had struggled for most of her life, but then came into money later, so had built her freelance career later. And for her, she was talking about the challenges of going from a scarcity to an abundance mindset, where you go from, okay, you don't have enough to, okay, you have enough, but like you need to make that money work for you. And it's just a very different way of thinking, which is very true, actually. And so it's a lot of those hearing people tell their own stories because personal finance is so deeply human, hearing people telling their stories through their finances and trying to figure out, okay, so what are some unmet needs that people have? What are features that you can build? The beautiful thing now about the AI coding is that you can build for an audience of one. You can rock up new features in a day. And so if someone has like a very specific need, before you might say, okay, like we're not going to do that. But because the cost to build has become so cheap and so automated, we can actually build features for a population of one. Now, where there becomes a bit of tension, let's say, is the internationalization. And the really ironic thing is that when we had like a super, super vanilla product, it's actually very easy to internationalize. We had some hacks. So, for example, you could choose your reference currency and we would do your tax calculations automatically if you were in the UK, but if you were from somewhere else, we'd just say, okay, what's your net salary? But then as you start introducing more features, you get pulled into the regulation. So, for example, open banking is our first case of that, where our open banking provider is also in the UK. We're doing an agreement with them, and then we can do automated integrations for UK and EU accounts. But then that means we have better features for UK and EU customers than for our US customers. So it's a bit interesting because sometimes when you do these N of one features, you can then alienate some other ones. But yeah, I think international expansion is on the roadmap. But the UK, honestly, is a great incubator for fintech startups. And I do think, the FCA is a big reason for that. The FCA is very progressive. I'm based between London and Berlin, and at the start of the journey, I knew that the FCA was the most progressive regulator. And that has been pretty critical in being able to do a lot of things. We spoke to someone building something similar, a similar proposition in the US, and they actually had to get fully SEC authorized just to provide guidance. And so that was an additional couple of months. I think it was around a year or 18 months to their production pipeline, which we were able to save because as long as we scope things, set up guardrails to make sure that we were only providing unregulated guidance as opposed to regulated advice, we were able to grow our product test much more quickly. And I think the FCA does have a lot of great initiatives. Stacey, you mentioned the sandbox, but the targeted support. But I think they are quite good at listening and trying to understand, and actually just having the humility to say, hey, like we don't know what this next phase is going to bring, but we want to work with the people building frontier solutions to understand and regulate better.
Yes, 100%. You both made my job easy by leading on to the next question. So, how do you think that these evolving sort of regulatory requirements are impacting personal finance apps specifically, particularly around savings, investments, and advice?
It's it's just changing the scene completely. As I say, I've been in this industry a very long time. I'll come back to the FCA in a second, but um, we've always seen people being excluded from support purely because human to human relationships were the way it's always been. And on that international side, especially if you're a US national here in the UK, for you to access an advisor that was able to help you with US portfolios, you needed millions of pounds. So actually, through the technology, we were able to create US qualifying portfolios that had no minimum level, which have been, again, one of our largest areas because there's a massive demand. And it's just provide using the technology to provide solutions for individuals that were previously priced out. Sharia compliant portfolios, again, all through those technology journeys. So the technology is now closing the gap for allowing people to access better products. Going back to that FCA point, absolutely. You know, for 25 years, if I was engaged with the FCA, it probably meant I was in trouble and was going to get a massive fine. Nowadays, the FCA is very much pro-innovation. They realize that technology has got a huge place to play in actually solving these problems for people. And they want us to innovate. They want us to show them what is possible. Moving from to an outcomes-based regulatory model has exactly allowed that to happen. So our experiences over the past 18 months with the FCA have been nothing but positive and so supportive. Purely, and as long as you've got the right client outcomes at mind, you're never going to get it 100% right all the time. It's especially challenging when you are regulated by the FCA, because that gives slightly additional pressure with regard to, you know, the responsibility, the legal responsibility for those client outcomes. But I think we've managed to demonstrate that what we've built within the sandbox is kind of the way the FCA would like things to happen, and you know, it is building things for the future for individuals. But it's been an absolute game changer, both on the regulation and where technology is to now actually support individuals that couldn't before.
Yes, I think it's really good to hear that the both of you have had positive experiences with the regulators and that you're, pushing yourselves to innovate more. So that's
Mm.
a very good sign. I think we always like to look ahead when we're speaking to our members. So if we look ahead to say 2030, what sort of development you'll most see in terms of how individuals manage and grow their personal finances? Is there anything that you'd like to share today?
Yeah, I've got a very clear one, and I think it again comes from having this international background, and seeing the differences in how British people and Europeans, I'd say British and Europeans are a bit more closer, and then Americans view their personal finances. And I think it really comes down to this idea of having a big vision. And something that does make me sad these days is that whenever we've done people's financial planning, a lot of time people feel really insecure in the UK and EU. People feel really insecure about their finances. And then we actually go and we map it out and we say like, hey, like you're actually in a pretty good position and you can actually, with all the four goals that you've given us, do you want to push a bit more? Do you want to be a bit more ambitious? And people will often be like, okay, well, that's reassuring, but no, I want to play it safe. There's this really good book that came out by Bill Perkins called Die with Zero, and it's all about reframing your attitudes towards money. So we've written a blog on the Moola Money blog website on this because it's just such an amazing book. And the idea is that there's no point in hoarding money like a dragon until you die. It's just a number. And even then, we also look at the FIRE movement. So what is that? Financially independent, retire early. And a lot of that is around frugality. And so our perspective is a bit different, which is that okay, if you're trying to save for something, then okay, it might be necessary to be frugal, but it's more like, okay, what are the things that you want to do, and how do you actually use finances as a tool to achieve those things? And how do you actually be more ambitious? And something that does make me a bit sad is that I do feel like in the UK and Europe, a lot of people have forgotten how to dream. And it's almost become like cringe. Like if I ask people, like, what do you actually dream of? What is your vision of where you want to be at retirement? It's very humble. And I mean, you see it in the macroeconomics, right? So America's just been this powerball of a machine that since World War II to this present day is a country that was built on these big dreams and grand visions. And yes, it does get almost delusional, and sometimes it is a bit like irritating when you're used to a more pragmatic approach. But it's propelled the macroeconomy. When you look at the EU, Jamie Dimon said in a speech recently, the EU has half the proportion of GDP that it controlled. I can't remember if it was 10 or 15 years ago. And it does come from that like enough is enough approach. But I don't think, inherently, I think it is just part of human existentialism that we should dream. What makes us different from these machines that are taking over so many jobs is that we can set agendas, we have objectives, we have the ability to do brilliant things. And I think I would love to see more of that in popular culture, along with the confidence that people can actually achieve them, or with just the willingness to say, hey, like, I might try this and give it a shot and it might fail, but at least I'm going to try it.
Absolutely. I think, you hit the nail on the head there. The AI and the technology is the tool. You've got to be looking at, and what it is you're achieving. Who are you achieving it for? Who are the people within, your family, your loved ones? That's the part of this that is very human. The tools are just there to help you achieve it. I think where things could get interesting over the coming years is using agentic models more into automating decisions for customers. I see that happening very soon within investment markets, more trading, so eToro trading 212, those type of areas where actually direct trading could work for those individuals and a lot of that automation. It's a very interesting space to be a regulated entity and then using agentic models to work for clients' personal finances, because then you're challenged as to actually where the responsibility sits within those agentic models, but nothing's, they're challenges we like. And for us, the next, going back to that international space, is we see the regulatory tie-up between the UK and Singapore. Very, very similar regulatory space, very similar problems, not just in the UK, globally, where people can't access the support that they need. And actually, that's part of the delegation we're going to next month to see what's happening over in Singapore, because generally things like targeted support and the decisions that are made here by the FCA, the good ones are taken up by other regulatory jurisdictions. So if we've managed to solve the problems here for UK financial institutions, then could be an opportunity for us over there. So yeah, exciting times ahead.
It's great. Good luck with it, Stacey. And Linda, you've left us with the narrative think about to go back and dream. So that's the good takeaway for us here. So thank you, Linda and Stacey, for your time today, for joining us on this session. And thank you all for listening. Our Spotlight On series will be available to watch on demand. So please tune in and enjoy, and see you soon in our next episode.